Welcome back, folks. This is June 23rd, 2020. Temporary daily uploads are continuing. We are looking at the Dixie on the left, or dollar index, and Eurodollar on the right. These are both daily charts. And you guys see me cover all these things on a week-by-week basis, and you see many examples on my Twitter. Today was one of those days where myself, being human, it happens sometimes. I do miss a setup. There's something that I like to see happen in the chart. I have my orders resting in the market, and the market does not trade to my orders. It goes in the direction I want it to go and want to be part of in a price swing, but it doesn't allow me the opportunity to enter. So I felt it was useful as a community and a developing trader to see that your mentor is not infallible. That means that I'm going to make mistakes just like everyone else does. And there's simply nothing you can do about it. It's one of those events where you want it to happen, you want to get filled, you feel strongly about the direction. Yesterday we covered how I change bias, how I can transition from one idea and then what would constitute changing that perspective and changing direction. We've been right in that regard, but I was unable to get anything on the Eurodollar today. So just want to quickly go over that. You can see the dollar index on the left hand side. We have made another lower low in here. It's one of those instances where we're, again, still looking at the potential of trading sideways. As I mentioned a couple weeks ago, nothing really is terribly exciting at these levels at this moment. We haven't had a lot of displacement. All we're doing is range trading. And it's just really interesting to see how this move occurred right at our volume imbalance. And I guess the fundamental backdrop to this, and I don't want to make this video long because there isn't really much to say except for I missed the trade. Got a lot of messages asking, what would have driven this down. There was discussion about the China trade deal falling apart because of Trump's rhetoric concerning their handling of the coronavirus or COVID-19, and that it's off the table. Basically, there's no trade deal because of their mishandling or lack of handling or communication or lack of communication pertaining to that COVID-19 outbreak. I also got a question from one of the members asking, how does politicians, rhetoric, all of the media headlines and all that, how does that work with the algorithm? Is the algorithm aware of all of that, or is the politicians or media aware of the algorithm? We are in an industry that is extremely greedy, and everything that is spoken, okay, like the economic calendar, it's been hijacked. Okay, it's the simplest way I can say it is that everything is scripted. Everything from your news. Okay, there are so many people that believe that the television that they watch and the news that comes across it is for your empowerment, for your enrichment. Okay, the news that they're giving you is for your own good, and really all it is programming. Okay, that's why they call it TV programming, okay, or television programming. Tell lies, okay, or tell lie vision, television, okay? It's all propaganda, even all of the things we watch as entertainment. That's why I do not watch a lot of TV. It's only been a very few number of shows I've given my time to over the last decade or so, because I want to limit how much comes into my mind. And news itself, I don't really watch that. I look at news headlines and I get a feel for that, and I can just breeze through a lot of the online medias to get those. And Twitter, that's why I usually stay on Twitter. A lot of questions, why am I not more active on Instagram? And why am I so active on Twitter? Well, Twitter is what you get. It is what you see, and there's nothing that I can't hide anything. Okay, I can take my account to private, but everything out there, people can see it. And on Instagram, I'm there just to be an irritant. So on Twitter, I like it because I can see what's trending because of the hashtags. And it's like a real quick finger on the pulse of what's happening right now. And if it's something that's buzzworthy, okay, or catches my attention, then I can choose to go into it. Whereas if I'm watching television, they may interrupt with their nonsense and say, breaking news, yada yada this, and all of a sudden they capture and seize your attention. And a lot of my family members are still in that, where whatever they see on Facebook or whatever they see on the news, it becomes an emotional roller coaster for them. And I just stay out of that. Okay, so the answer to the question, I got one from the member, is politicians are not aware of the algorithm, and the algorithm is not aware of the politicians. Okay, the speech or talking points that these people say are conditional because, as I mentioned before, there are times when manual override, okay, or human intervention will come in, and it's all timed and it's all programmed and it's absolutely rigged. There's no way around it. But there is no awareness of the algorithm from, at least from my understanding. Politicians aren't aware of that. Most politicians aren't even aware how stocks move, and they just take advice from someone else that knows more about what's going on in the marketplace as a trader, or if they have inside information, which is illegal. And that's what we've seen with some of the Democrats in recent months. They've been exposed with using inside information, exiting the stock market before all this took place, which, one could argue. I mean, even we were talking about it's happening and made it public record. Was I getting inside information? No, I was just watching what was going on over there in China and getting a read on that. And it's just like, the weather. The weather that's bad in the Midwest, it's eventually going to come to the East Coast. So, it doesn't take rocket science to figure out that we had a real problem coming. And I wasn't worried about the getting sick stuff. I was worried about the disruption of services and goods. And that's why I prompted everyone to prepare themselves. So anyway, I've been going on much longer than I wanted to. I want to get back to this and close this video up. The volume imbalance on the dollar, we saw the reaction there. The narrative's been put in place that the China deal is off the table because of the COVID-19. Therefore, it caused a ripple. If you watched a day ago, it was a real big drop on the dollar, and all the foreign currencies had a surge. All that's fine and great, but we were looking for this area anyway in here as a potential problem. So it reached up into there, and we wanted to see if it had a willingness to go above that. If you want to believe that they took the wind out of the sails with the China deal coming off the table because of COVID-19, and that was the reason why, if that's what you want to believe, I'm not going to argue with you. I'm not going to arm wrestle with you. I'm not going to try to say that's right or wrong. I am saying that I don't believe that. I don't personally believe that. So where we're at here, we may stay in a range, but we've taken out Thursday's low. So I have to be at least willing to consider running below this low here and staying firm to bullish on foreign currency. Okay, so here we have euro dollar. We had a nice bullish day up in here, and all these lines in here, you'll see that when we get to the lower time frame. But it looks like it really wants to get above this high here. So that would also bring us back to the low running out on dollar. So it just looks like it still wants to press higher, and a higher euro may be in store. So might be seeing 114.50 in the coming days on euro dollar. So that's what we're working with going forward. So that shift in bias, if you will, yesterday stays intact for me. So we're going to drop down into lower time frames. All right, so we have our charts set to the 15-minute time frame, dollar on the left, euro dollar on the right. And I want you to take a look at this up close candle right in here. This last up close candle. This is our bullish breaker. So we have a low, high, lower low. We traded through it, and look inside of that, we have a fair value gap. All right, so inside this area here, I was looking for reasons to go long and running below these lows in here. So below these lows, I had an order at 112.77 buy limit, and I wanted to try to get filled on a 5-minute volume imbalance, which we'll look at in a minute. But looking at it here, you can see the dollar was making slightly higher highs in here, and at the same time the euro dollar was saying, I don't believe I need to go any lower. And it just would not give it to me, so it created SMT divergence there. USDX SMT divergence. So dollar was making higher highs, should have seen lower lows in here on euro. It didn't do it, didn't fill me, and then boom, it took off. All right, so we're going to drop down to a 5-minute chart. All right, so you can see the 5-minute chart on the dollar index on the left and euro dollar 5-minute chart on the right. Now I already have my optimal trade entry in here just to show below 50 is a discount, and I wanted to get into the 12.77 level and get down to the order block. And right in here, I felt that we would stab down into that during the New York kill zone, and it didn't do it. Just stagnated in here, and then not long after me posting, watched 112.75, 112.70, study that, and you can see that being outlined here. The market just simply said, everybody's on board on this one, and euro ran away. Okay, and it went up to 1 standard deviation. Even though we didn't get a fill on the range, it still sends us up into that level here. And it's also the old rejection block on a 15-minute time frame. So I didn't mention that, but we'll try to scrub back in here. So inside this high here on a 15-minute time frame, and I'll just do it real quick so that way you can see it. That high is being noted for its highest up close. So this line here, we're going to go back, and that's what's occurring right in here. The highest up close in that swing, that's the rejection block. Again, we don't need it to trade above the high, just above the rejection block, and it does that here, and we receded a little bit since then. So in short, today's video was really just a response to an email I got, and also just to share an opportunity where ICT himself missed an opportunity in here, and you all knew about it, so it wasn't like I'm just giving you something to talk about and sound human. I'm really telling you the truth. I had orders in here. I was even telling my sons, I said, look, I got 12.77 as a buy limit. If it trades down there, I'll get filled, and I think we'll see this type of move here. It just simply didn't give it to me. Okay, so I know you're probably thinking, how often does this happen, ICT? If I try to trade daily, even if I'm practicing, which I'm usually practicing in New York lately, but before I did the mentorship, whether I was taking live trades or not, I would practice in London and I would practice in New York. But because of the mentorship, I have to rest more, so I don't do too much with London. Once a week, I'll focus in on what day I want to be doing it, if at all. But mostly I've been doing New York. So if I did return back to both sessions, London and New York, every single day, it's a fair assessment to look at my notes and my consistency. I miss about 3 or 4 of them a month. Okay, so if that's any help to you in terms of seeing whether or not there's a setup. Now, it doesn't mean I won't take a trade later on based on institutional order flow, using a order flow entry drill at a later or higher point in the price swing. I'm saying that if I have a trade idea and I actually have orders resting in the marketplace and it does not fill, it's usually about 3 or 4 times a month. And again, that's assuming I'm busy and I'm trying to do every day per week. So, out of 20 trading days minus non-farm payroll and the FOMC day, out of 18 days, 3 to 4, that's about right. Okay, that's for me personally. So hopefully this has been insightful. It doesn't give you a whole lot of fireworks in this one, I know, but not all of them will. Okay, so every recording has its own measure of worth and value, and I just wanted to make sure you understood that I am capable of missing moves, and today was one of them. My sons, they knew about the order, they knew where I wanted it to go, and it took off, and my oldest son was quick to rub my nose in and say, I thought you were ICT. So anyway, nonetheless, this is the example for today. I did miss the opportunity to get in here and trade with the optimal trade entry, failing to come down and get me a fill, but it did in fact run higher as we've been looking for since yesterday when we changed our bias. So I'll be back tomorrow and we'll cover midweek review. There won't be this type of short video. It'll be our normal midweek review, and then I'll resume back to these types of videos with Thursday and Friday. Until then, I wish you good luck and good trading.